Up next is a corporate presentation. And yes, I think it's one of the most important, very significant topic, backbone of financial decision making. Yet traditionally, underwriting relied heavily on historical records, manual assessment, and limited data points. Decision often took days, sometimes weeks. Many deserving customers remain undeserved simply because the system lacked the ability to see their complete financial story. But that story is truly evolving and changing in current times. Let's look forward for another topic from data to impact, smarter digital underwriting, and that will be conducted by our next speaker, Joydip Gupta, APAC Head, Scienaptic AI. Can we have a huge round of applause and welcome Mr. Gupta on the stage, please?
Thank you. So while they're getting the clicker, this is not going to be a sales pitch, so you can relax. I just hit this, right? Yeah. So basically, I'm Joydip. I represent Scienaptic. I look after the India business. I've been in the industry for, as you can see, for a really long time. As part of our, we do a lot of underwriting and portfolio monitoring using AI, analytics, systems, alternative data. And in the last maybe decade or so, I would have interacted with at least 100+ banks and NBFCs across India. We have about 40, 50 of them are our clients and had very deep discussions. So I just wanted to take the next 10, 15 minutes to share some of the best practices that, we keep getting a lot of questions from our clients, our prospective clients, and sometimes they're doing some things that are really good. Sometimes they ask questions where I wish I could address that to a bigger forum. So I just wanted to start with a few themes and maybe over the next 10 minutes talk about some of the questions that are typically asked. One of the questions that, or one of the areas where a lot of people are debating about is alternative data, right? I think those of you who are in the lending space or underwriting space, obviously you've asked a lot about alternative data. And people ask, yeah, aapke paas kitna alternative data hai, social media, telecom bills, etc., etc. So, and sometimes the questions aren't very useful, right? So if you think about alternative data, I think the first thing I ask my clients to think about is, kyun chahiye alternative data, right? What is it I'm talking about from a lending and a credit standpoint? Ultimately, what you're trying to find out is if the borrower has the ability to repay the loan and the intent to repay the loan, right? So these are the two big questions. If I have enough money over the next 3 years to repay the 3-year loan, EMI, and I have an intent to repay, I'm going to repay, right? But if you think about some of the alternative data that people are looking for right now, let's say the utility and telco bills. So my utility and telco bill can be 1,000, 2,000, 3,000 rupees a month. My salary could be 2 lakhs, 4 lakhs, 5 lakhs, but my utility and telco bills are 3,000 rupees, right? So really, if I'm able to pay that on time, does that mean I can pay an EMI of 1 lakh or 75,000 a month, right? So what is it really telling you? And a lot of people ask me for that data, and I say, look, for your loan, it doesn't make sense, right? The ability to pay cannot be determined by paying whether or not they're paying a utility bill. So what you should look for is an income surrogate, right? So am I asking for alternate data that can really tell me how much is this person earning, which can tell me how much is this person willing to pay, right? Now, the other way of looking at utility and telco bills is the intent to pay, right? So if I'm not paying my telco bills for 2 months and then the Jio calls me or Airtel calls me and says, ki line band kara denge, and then I pay. If you're looking for that, that's interesting, because then you are saying that, look, unless I send make a massive collections effort, this guy is not going to pay my bills. So really tie it to the ability to pay and intent to pay. The other part I'll cover in one of the later slides is around fraud signals. So a lot of companies are, and some of our competitors are coming up with these alternate data around catching fraud. That's interesting, and I'll talk again a little bit later about what are the right signals from an alternative data standpoint that can tell you about a potential fraud. Let's keep moving. The next topic I have is AI. Again, we do a lot of AI. Our company, we started doing AI-based work maybe more than 10 years ago when machine learning and AI was still very new in India. We've got a lot of clients in the US, and we've taken some of the learnings from there and are starting to implement that across India. One of the topics that we work a lot on, and I don't know if we have data scientists and credit analysts here, is around machine learning models. So people talk to us about predictive machine learning models. When we do a machine learning model project, or if you are in the lending business or in any banking business, if you're asking your data science team to build a model, I think the question that people ask us is, how well is your model performing? Okay, there are several methods of measuring model performance like KS, Gini, et cetera. I think that's the wrong question to ask, right? I can have a model which has a very good KS and Gini, but ultimately the right question to ask an analytics person is, what business impact will it deliver? So again, I would like to share this with every one of you, that the next time a model is being built, ask, okay, you have a great risk ranking and all that stuff, but really, how does it impact my approval rate and how does it impact my default rate, right? What we do in Scienaptic is a concept of swap in and swap out. So if I run a model, a predictive model that predicts the risk of a borrower when they are applying for a loan, the whole point is if the model is predicting risk accurately, I can take and I can, let's say I sequence everybody in order of increasing risk. I'll take the top 10% of the customers who have the highest risk, and can I trust the model and I'll swap them out. I'll not give them a loan. And then I'll run the same model on the rejected population that you're rejecting. So 65% of your customers are getting rejected. If I run the same model over there and it says that these are the best 10, 20% of those customers, can I swap them in? So if I swap out 10% of your funnel and swap in 20%, I get a net increment of 10% more approval rates. And if the people that I'm swapping out are actually really high risk, swapping in is actually really low risk, then I end up reducing your portfolio loss rates, right? So whenever we do a project, we have said we won't not just measure the model case Gini because it means nothing for a business person like me. We are definitely going to look at swap in and swap out and tell you that if you had run this model, the Scienaptic model, 2 years ago, here is where you ought to been now. Your book size would have increased to this much, and your NPA would have come down from 2.5 to 1.95. And we've done this impact. Explainable AI is another topic that people talk to me about a lot. I think RBI is also asking, why is AI a black box? Can you make it explainable? For those of you who don't know what that means, essentially, people are used to giving loans or making a decision on loans based on some rules and policies. Very easy to say which policy, why did you get declined? From there, banks progress to logistic regression model, which is still an equation, right? 2 or 3 dimensional or a single dimensional equation. So I can tell that you got rejected because these variable and that variable pulled your score down. When you do AI, it's a multivariate, multinomial equation. So it's like a decision tree. It's very hard to tell exactly why somebody got rejected. And as a lender, if you're not able to explain it to the regulator or even to your own business person, why did you reject a person or why did you give a loan to a person or charge a high interest rate, then really you're not controlling your own destiny, right? So, that's the concept of explainability. We have solved, and at Scienaptic, we have figured out a way to solve this explainability problem. To the satisfaction of regulators in the US and in India also. There are 2 ways to look at explainability. I won't get into too much detail because it's very technical. At a model level, it's very difficult to solve the explainability problem because machine learning models you cannot write it as an equation. But we have solved it at a application level. So what we do is, let's say you have an application and you run it through a risk model and it comes up with a score. We immediately run it through a sensitivity analyzer to say which are the variables that caused this particular application score to come down the most. And those are the negative indicator or red flag variables. And we can talk about this more in detail. We have a booth also if you're interested. But I think in the interest of time, I'll move on. The other topic that we get a lot of questions about is Gen AI. Everybody is doing, if you're representing a bank, a large or a mid-sized bank, I'm sure you're having a lot of Gen AI projects right now. Great. I think the one thing that I find very, very disturbing about the Gen AI projects is people are saying they're doing Gen AI for the sake of doing Gen AI. It's almost like a bragging right कि हम दो Gen AI के projects कर रहे हैं. When I ask them what is the use case, they're able to tell us at a high level what the use case is. But if I'm then going 2 levels deeper and saying, and how do you think LLMs will solve this use case? Then they say, यार वो तो आपका काम है, आप करके दोगे. And there are some very, very basic fundamental issues with Gen AI. Okay, it's very strong. Don't get me wrong. For data analysis, Gen AI can be very good, right? Instead of hiring a lot of analytics teams, at Scienaptic we have come up with like a chat GPT kind of a thing. So if you take our software and put it to your core banking system or to your data lake, and you can keep asking कि यार मेरा growth rate यहाँ पे in these states, why is it not growing? Why is the approval rate not growing? My Karnataka state default rates have gone up. Can you tell me top three reasons why it has gone up? And what can I do to fix it? You can step by step ask these questions, and our Gen AI tool can answer it. But that's for a specific use case like data analysis, right? For document processing, obviously with LLMs, now you can take all land records, house records in any language, put it in a box, shake it, and Gen AI will come up and translate it and give you some rules based out of that, right? Obviously, for productivity increases, you can actually disrupt the whole loan application acquisition cycle, right? The loan origination cycle through Gen AI. We work a lot in the loan decisioning space. People ask us, how can I use Gen AI in the loan decisioning space? It's hard, right? And the reason it's hard is because Gen AI hallucinates a lot. So can you give a loan to a person based on a Gen AI model, which you know is wrong 5% of the time, right? And unfortunately, in lending, you'll only find that out after 2 years. Explainability is another issue with Gen AI. So there are some use cases that's coming up. My only submission to the group would be get deeper into the use case to really find out if that's something that Gen AI can actually solve before you spend 6 months doing a POC with a vendor and spend a lot of resources. I think the next topic is risk-based pricing. I think every bank, every NBFC I talk to does risk-based pricing. But I think the sophistication of risk-based pricing, if you tune it up a little bit, you can actually get a lot of mileage from it. So, for example, let's assume that you give a 20% interest rate, okay, to average interest rate to customers, right? Let's assume that at that interest rate, you're making 5% margin, right, after cost of capital, OPEX, and all that. So 20% interest rate, 5% margin. If you increase the interest rate to 21%, so you did a 5% jump in your interest rate from 20 percentage points to 21 percentage points. Your margin increased from 5% to 6% because the cost stayed the same. So your profit margin increased from 5 to 6, which is a 17% increase. So 5% increase in interest rate, 17% increase in margin. That is probably the number one lever to increase margin without doing a lot of operational improvement. So, but I don't think people put a lot of science into risk-based pricing because everywhere that we do projects, we find that there is a lot of money that we are leaving on the table, the bank is leaving on the table. And just by doing a few changes, we can actually improve the profitability. The other thing we find is by doing risk-based pricing, there are a lot of customers you're declining because they don't have a very good risk profile. But if you could just take the top 10% of them, charge a little bit higher to cover for your risk, then you can actually your approval rate goes up by 10%, everything goes up by 10%. Right? This is where you need sophisticated ML models because you need to know the real risk and how much to charge to cover for that risk. And from an ECL, et cetera, standpoint, RBI would also like to monitor you for those. I'll keep moving very fast. So collection strategies, this is the last part of my analytical use cases. Again, we find a lot of, everybody has collection strategies, of course, but there's a big difference. There are about 5% of the banks that have very good collections analytics. The remaining 95% actually don't have even close to that. So we studied the best practices of what those 5% do, right? Bajaj is one of them. Now, I cannot, obviously don't have time to discuss everything, but they use models, behavioral or collections models to figure out the propensity of this person to pay or not to pay, roll forward to the next bucket of collections. But beyond that, they then say that, okay, so that's part number one. Then they look at the different channels they have, and they have analyzed the channel economics and capacity and saying that, okay, this customer has taken a loan of this much size, they've already repaid this much principal. Is it worth sending an agent to their house, even if that means I can recover, right? But maybe earlier on, when there is a lot of value at risk, you can send somebody, have an expensive channel. Capacity of agents is also limited, right? Whereas email or notifications is unlimited capacity. Probability of recovery varies by channel. So we are doing a study for one of the home loan companies where we are saying that depending on which channel you use, collections channel that you use, the probability of recovery changes. So you have to say, what is the probability of the person to pay? What is the probability that the person will pay if pushed through a particular channel? What is the cost of that channel? And if it's a collateral-based loan, basically a secured loan, then what is the cost of repossession and salvage costs? So again, this is one thing that I found that in the India market, people are not doing a very sophisticated job of, and there are 5% of the companies who are doing this really well. I think there was a lot of discussion on fraud in the previous panel. RBI has asked for some early warning signal systems. And so on the back of that, a year ago, we've launched our early warning signal system for fraud as well as for credit. It is still in an evolving phase in the market. A lot of alternative data is being used. I mean, there's at least a dozen companies which provide different alternative data on fraud. The problem is, and this is what we are trying to solve in Scienaptic, you can get a lot of data. And you can get a lot of signals. And you end up deploying an army of fraud FCU team to go after those signals and find out that 0.1% of them are actually fraud, right? So the false positive ends up killing these fraud projects. So essentially, what we are trying to do is look at all the alternative data that is out there and do we are doing a bunch of POCs for different kinds of businesses, rural lending, urban lending, salary lending, and so on, and trying to find out what sorts of triangulations will yield in minimizing the false positives. So agar aapka, let's say you have 100 fraudulent cases and you have 10 lakh customers, I don't want to give you 1 lakh for false positives. I would rather give you 500. Maybe I'll miss out on a few frauds, but I don't want an army of people trying to go after and chase false positives. People are asking us, can you build ML models on fraud? It's very hard, right? Because machine learning, the machine will learn from historical data. It needs to learn what defines good behavior and what defines bad behavior, which means to have a good machine learning model, you need to have enough fraudulent cases so that the machine knows what are the attributes that leads to a fraudulent behavior. Unfortunately or fortunately, the fraud rate is very, very less, right? I mean, it's growing, but it's 0.1%. So if you just give me 10 cases of fraud and 10 lakh customers, the machine won't be able to learn what defines fraud. So ML models are, it's very hard to build ML models on fraud. What we instead do in Scienaptic is we build anomaly detection models. So we say that these kinds of customers this customer belongs to these 3 cohorts. They shop at this time, or they use their card at this time, or whatever it is. But then now I'm finding some anomalistic behavior about this customer which doesn't fit into any of these cohort behaviors. So basically what we are trying to do is find potential fraud indicators and then let the case management team figure out if there are actually frauds or not. The last section, 3-4 slides I've got is on digitization, because at Scienaptic, we also do a lot of digitization. We have an underwriting platform, which actually some of you guys here are our clients, you guys use. But essentially, the idea is, how do I reduce the TAT, remove the friction points in underwriting, but at the same time, make it so agile that any changes that you want to make in your underwriting process can be configured from the front end by the risk or the credit people without having to stand in front of IT. Now, in digitizing underwriting, here are some of the things that best practices or some of the lessons learned. When people are going through digitization journeys, quite often they look at their current loan journey and what's broken, okay? And they fix those points, only to realize 1.5 years later that I could have taken a bigger view and digitized, end-to-end the journey, right? And I can give you examples, a lot of examples, maybe later on if you're interested, on where are the gaps that we have found people take or blind spots. If you invest a little bit more time, I'm saying instead of investing 6 weeks in designing the process, maybe invest 8 weeks in designing the process, but design it for the future, right? You will save yourself a lot of pain in the next 3 years. Because koi bhi digitization project, it takes several months, and you don't want to redo it every 2 years. We have a BRE platform where your BRE rule engines can be hosted. People are doing RFPs on BRE platforms, comparing us to other BRE platforms, and using that as an automation tool with a nice front end. But that's only half of the problem, half of the potential. That's definitely the first potential. But I think what we have designed our BRE tool is to say, that once you start using this tool, all the data can exist at the back end. Use it as I've just got 2 more minutes. Use it as a system of intelligence, right? Use it, put your LLMs on it, ask the system, basically do rapid experimentation on the tool, do scenario analysis. Sab data to hai. What if I had changed? I'm seeing a lot of defaults in the CIBIL 650 to 700 range in the state of Tamil Nadu that I've sourced in September and October. Can I change some of those guidelines and run it on my historical data and do a what-if analysis on 3 or 4 scenarios? What if I can do all of that in less than 1 hour without ever going to IT by my credit or my risk teams could do it? So back testing, we have a dashboard. We ask our clients to review these dashboards on a monthly basis. You can also do like an A/B testing or champion challenger. So when you're thinking about a digitization tool, please think about analytics first, not just digitization, or at least think about analytics, right? And the last 2 slides, I just wanted to throw out something which a lot of the clients are very interested in. This is a product that we have just launched. Most of my clients, for a single product, they take 1 bureau, right? And they always complain to us, "Yaar, bureau down hai, ya latency is high, and I lost a lot of business because of that." So we say, connect to another bureau. And they're like, "Nee, but the formats are all different. The output will be different, etc." So we have come up with a very little small piece of a module where we say, connect to at least 2 bureaus. You'll have better leverage as a bank. I'm sorry if there are any bureau people here, but you always need to know, CIBIL needs to know that, okay, if I don't react to them, they can easily just within 30 minutes move some of my volumes to a secondary bureau or vice versa. So connect to at least 2 bureaus. You will get a 20%, 15 to 20% savings, I'm telling you, with the most expensive bureaus. With our tool, you have the ability to switch volumes quickly and controllability. So you can write some rules and say, for this, make a TransUnion my primary. For these, make Experian my primary. And then define some rules which says, if my primary bureau doesn't respond in 10 seconds or 20 seconds, I switch to my secondary bureau. Or it gives me an NTC or whatever quality issues are there, I switch to my second bureau. So that means the primary bureau has to be good. And of course, if you take multiple bureaus, the downstream operation should not be impacted because bureaus have different formats. So we have created a standardization box where everything is mapped to a standard format. So downstream policies and LOS doesn't have to change. Procurement teams have saved 20% just by the ability to connect to multiple bureaus and the ability to fine tune and say, nahi, abhi main 90-10 ki jagah, CIBIL ko 90, Experian ko 10 ki jagah, I'll make it 80-20 in like 10 minutes or half an hour. So these are ways in you can negotiate with bureaus. And this is my last slide. You can also reduce bureau spend. A lot of clients, I see they're doing initial go, no-go by pulling bureau. If it's a repeat customer business, at least do a dedupe check first and see if this customer will be rejected based on past performance before you pull the bureau. Or based on honest performance. Reuse old bureau data. A lot of people are taking bureau scrubs for your existing customers every month. So what we say is, let's put all that data into the back end of our multi-bureau technology. And when a customer comes in, first check if the bureau has already been pulled in the last 15 days or 30 days. Use that data, don't pull a bureau. If the person gets rejected with that data, you wouldn't have given them a loan anyway. So uske liye bureau kyun pull karna? So basically using this, people have been able to save like 30-35% on their bureau spend, which for a growing business is a lot of, it's actually more than what they pay us. So I think I just want to share this, whether you do it through us or whether you do it internally, I think definitely have a multi-bureau approach for any business that's growing. And I think that's the end of my presentation. Hopefully this was useful. If you want to talk more, we have a booth right outside. I'll be there to talk more. Thank you.
Surely, it was very insightful. Thank you, Mr. Joydip. Thank you so much. And I'll request you to please stay back as we'd like to felicitate you. And for felicitation, I'll request Mr. Mohammed Khalid Hussain, Head IT and Cyber Security Head, Bombay Mercantile Cooperative Bank, to please join us on the stage. Can we have a huge round of applause for Mr. Joydip Gupta? Well, thank you. Data by itself creates information intelligence and create decisions, but the impact is created when those decisions actually